What's going on, guys? Welcome back to another video. Thanks for tuning in to Stock Essentials. My name is Alex. We're going to be going over Palantir stock. So it reported some pretty nice earnings, and we've seen a really nice run up on Palantir stock right after our earnings announcement. It was sitting just around low $22, and then it hit highs of just under $26 before consolidating and feeling pretty nice support at this $24-$25 price range. So a lot of people are very bullish on Palantir, and we're going to be getting into some really nice option plays that you should play if you are bullish on Palantir in the long term. So ARK Invest of Kathy Wood is constantly buying more and more of Palantir. They haven't made many purchases of Palantir stock lately in their ETFs, but we can see here after some positive earnings announcements, they've bought 22 million or 2.3 million shares of Palantir right after earnings announcement, and then the very next day they bought 1.1 million shares of Palantir as well. So they're very bullish on Palantir, and they're constantly adding more to their ETFs. Now, if we want to see how much total they spent on Palantir, let's calculate it. Let's do 23 million, 2.3 million plus 1.1 million shares. 3.4 million shares that they bought in the past 2 trading days. And we can assume that they bought at a price point of around $25 per share, which is $85 million placed into Palantir stock. So they're very bullish on Palantir, and we can see why. So we're going to be going into some really nice option plays. Of course, you could just buy and hold shares. I'm holding personally 300 shares of Palantir. I'm pretty bullish on it in the long term. And we can go into the options summary. Overall, the flow is very bullish. A lot of people are buying calls. Call to put ratio is outweighing the puts by 76%. And overall, a lot of bullish flow for Palantir. IV rank for Palantir is at its all-time lowest, 45%, very low implied volatility. IV rank is less than 1%, which means that it's very low compared to historical averages. Of course, during the earnings run-up, implied volatility was pretty high, but then after earnings announcement, it got absolutely crushed. So this is providing a very good opportunity to play options, because the lower the implied volatility means the lower costing premiums the contracts are going to cost. Normally, I recommend selling options, selling cash puts, credit spreads, covered calls, those sort of options. But I'm not going to be recommending those, because if we take a look at the premiums, they're not very high. We're not going to be collecting many premiums, because implied volatility, as we mentioned, it's at its all-time lowest that it's ever been. So we're actually going to be doing some leap options. January 2023 is going to be our desired expiration date. This is going to be roughly a year and a half out, so it's giving you lots of time on your hands. It's 17 months of expiration, long contracts, and we're playing this in the long game. As we can see here, a $25 call option is going to cost you only $658 per contract, and it's going to allow you to leverage 100 shares of Palantir stock for a fraction of the price, and it's going to be giving you some really long expiration, so a lot of time for the option play to play out. As we can see, open interest is pretty good as well. A lot of people are starting to buy into these options, realizing that the implied volatility is at its lowest levels it's ever been, meaning that the premiums on these contracts are going to be extremely low as well. So you could buy one of these contracts, or if you have a smaller account and you don't want to be as risky and place hundreds of dollars into Palantir call options, you could do what's called a call debit spread, which is also going to we're also going to be doing it on this long 2023 expiration date. So we're going to be selling the $25 strike and then buying the $22 strike right under it. As we can see, total cost is going to be $123, and our expected profit is going to be $173. So really nice profit. We're going to be turning 123 into $300. The max profit on call debit spreads is going to be the width of the strikes times 100 and then minus the cost that we're paying to open up the debit spread. So it's going to be $300 minus 123. That's how we get our expected profit of $177. So it's roughly around 150% return in just a year and a half. If Palantir stays above $25 per share. So as long as it stays flat or rises by your expiration date, you're gonna be basically doubling your money. Really good options play, especially just for a year and a half of a time. If you want to be a bit riskier, if you believe that Palantir is going to rise much further, then you can do some higher strike prices for the call debit spreads. If you think Palantir is going to be above $30 by 2023, remember this is a really long expiration date, it has a lot of time to play out and basically rise. So you could do this $30 strike right here. You sell that, and then you buy the strike under it for the $27 strike. As you can see, total cost is going to be $98 per spread. And our expected profit is going to be pretty nice as well. It's going to be $202, which is tripling your money as long as Palantir stays above $30 by expiration, which it very well can be because we're choosing a very, very long expiration date for our contracts to play out. If we take a look at what the profit calculator is showing us, really nice profit calculator right here. As long as it stays flat, we're going to be making money. As we can see, over time, it's going to increase in value. And the best thing about it, this is the $25 strike, $25 and 22 strikes. So as long as it stays above $25, we're going to be making money, as we can see here. And over time, it's going to be increasing in value as profit, as long as implied volatility stays constant and Palantir stays flat. So implied volatility is at its very lowest levels, so it's going to, of course, be rising in the near future. So if we increase the implied volatility a little bit, watch what happens with the profits. It's going to be increasing ever so slightly because the contracts are going to be pretty nice as well. So overall, we just want time decay to eat at these contracts, and we just want Palantir to stay above our price of $25 per share. Of course, if you want to be a bit riskier, choose the $30 strike or even the $27 strike. Make sure the sell is on the top and then the buy is on the bottom, and then we can you'll see call debit spread on Robinhood on your right side of your screen. So overall, we're pretty bullish on Palantir Technologies. Very good company, and overall, we can see some really good growth from them. And they've been pretty flat for a while, so it's due for a breakout in the near future. That's about it for this video. If it helped you in any way, please leave a like, comment down below what your thoughts are on Palantir, and of course, subscribe if you're new to the channel. It helps out a lot. Thanks for watching.